What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to be looking at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get going, don't forget to check out the description below. We got links to the Traders Helping Traders Discord. We got links to the Rawstocks Discord that has recently launched and is growing quickly. With my Discord, we're doing a 7-day free trial for premium membership. That's where you get the rustic callouts. You get my personal picks on Tesla. Occasionally we'll drop a SPY in there or something else, but mostly it's just Tesla options callouts. But other than that, everything else is free. All the education, the chats, the community, all that's free without premium membership. But it's 7 days free trial on the premium membership, so check it out. Also, again, Traders Helping Traders Discord is in the link as well, hanging out there during market hours as well. Also providing call outs to the premium members, sometimes dropping a free call out here and there as well. Also, the social links are in there in case you want to follow me on Twitter or any of the other socials, and then some other ways you can support the channel by checking out the Rawstocks merchandise or even just making a donation. Also on the Rawstocks Discord, we have a supporter role as well if you just want to help support the channel. It's only $3.99 a month. Really helps out. Also, smash a like, subscribe, share with all your friends, help get the information out there. Our channel is growing quickly. We're nearly to 500 members. We're growing really fast. Once we hit 500 members, we're giving away a free Rawstocks t-shirt to one lucky subscriber. So be looking out for that as well. So without further ado, we'll jump into the charts. Let's take a look at what we did today. So it was a bearish candle, down close candle. We gapped down. We traded down. We ultimately rallied up into the end of the day a little bit. But our daily bias is bearish. We closed below the low of the previous day. It's a bearish candle. We are still watching this trend line here. We are still below the trend line. If we also pop up our 21 SMA, we are also below the 21 SMA. Now, this could be a trap, could just be a little bear trap, a little Tuesday manipulation heading into PPI and FOMC. That's entirely possible, but we have taken a low of the week. Low of the weeks typically come on Tuesdays and Wednesdays, Tuesdays or Wednesdays. But that doesn't mean that with the data that we have going on that we just couldn't see this continue to flush. We have seen in other events, I think back over here, it was maybe September, where we saw a price, head up. And I think this was a CPI day here, maybe this day. One of these days started the drop, right? And then, again, I think somewhere over here we might have seen something very similar. So is this the beginning of a further sell-off? And where would that sell-off take us to? We'll get into that in just a little bit. Let me take off this SMA, but just want to make sure you guys know we closed below the previous day low. We have not taken the previous week low. We have not traded down to our liquidity target of 226. Let's mark that on our chart there. If you don't already have it, we've been watching this for weeks as we sideways consolidated. Remember that we've been talking in this video about our optimal trade entry, right? There's our fib levels. We got our optimal trade entry. Our symmetrical swing would take us all the way down to 210.65. There was also a smaller optimal trade entry today, and we'll take a look at that. That has similar price targets taking us down lower. Okay, if this plays out, which it has in the past, this move down here to this move here was an optimal trade entry. I don't think we got full symmetrical swing. Let's take a look at that. We've talked about it in previous videos. We have not hit full symmetrical swing, but we did trade up to optimal trade entry, overshot it by a little bit, and then dumped down to at least our take profit level 3. Didn't quite get all the way to symmetrical swing. Doesn't mean we won't eventually get there, but right now we've been rallying since that point. We also, if we wanted to look at this move here and this low, we also traded back up to and through by a little bit, optimal trade entry, and then we saw a sell-off. Okay, so on these daily charts, when you start to see these optimal trade entries on a larger time frame, there's a high possibility that in this optimal trade entry level, that's where we're seeing smart money, right? They're continuing in this move here. They're starting to buy their shorts. We come up, we steal those stops for anybody who tried to go short besides smart money, right? Because they're not running stops, right? We run it up, we trap some bulls, we drop it down, we run it back into optimal trade entry. All of this here is accumulating. Retail might look at this as accumulating for the next rip up. It's entirely possible. But again, with this optimal trade entry here and then setting lower lows, it's starting to look a lot more like we're going to dump down to this 210 eventually. We might find support there. We might not run all the way down to the lows, but this is definitely something we're watching. Called it out in these equal highs here in these wicks. But these are also equal highs. We will come back for those. We will come back and break those. So again, not sure that we're going to take previous month low or complete sell side liquidity to the bottom. We have this megaphone pattern using our trend line, our auto trend line indicator. Not too concerned. What I do notice is that, this continues to offer resistance, but this aggressive sloping bearish support, I don't think we're going to dump all the way down. If we did dump all the way down much further, we'd be looking to come down to this order block, but we're nowhere close to that, so it's irrelevant at this point. We're just looking for the move. We're right around equilibrium on the daily chart. We are on the premium side, not the discount side, so that's something to note as well. I'm going to go ahead and take that fib level off, and then I'm going to use my path tool to just show some potential situations. So again, highs or lows we're looking for on Tuesdays or Wednesdays. So let's just say that we are going to rally. Okay, we set our low. Looks like a move. In that case, it would be manipulation. PPI, FOMC could rally us up, come back up here, right? And then we could start to head to higher highs, taking the buy side liquidity here. We'd be targeting the order block up here. There's really no fair value gaps there. So that's what we'd be looking for, is this up close candle before the downtrend potentially, or just the level itself of liquidity at 268.73. Okay, so if we started heading higher, we broke out of this trend line. We saw a nice day or two of reversal up, maybe back test, maybe not. Then we'd be looking for us to push up higher to that 268, 269, eventually running up to 280. So we'll see if POW comes out, if PPI is received as positive, POW comes out, doesn't pivot, doesn't rate hike, that could be received as very bullish, and we could just go running. Now, oppositely, maybe this move here was the beginning of a smart money reversal. And if that was the case, we would come down, we would take that, potentially back test, and then come back down to that 210 minimum, or potentially even head lower. There is an order block here. You could say it's this candle here, it doesn't really matter. There is an order block in here. We could find support there and then see a bounce, a further bounce from there. So that'd be our bearish case scenario if we end up selling off tomorrow, and then that sell-off could be continued. If you look here, on this sell-off here, we had high of the week on Tuesday, and then we sold off here. Back here, this was a Friday into a Monday, and then we caught a sell-off. So it can go both ways. We did set a low of the week so far, but Wednesday could still be a lower low, and then we even could bounce at that point if we want to catch a reversal, or it could just be a straight flush. Let's see if there's any examples of midweek flushes that we can find. So there's a high on Wednesday. Yeah, so it goes both ways. But the fact that we did set a low on Tuesday, a little bit, even though the bias is bearish, a little bit like, okay, if we set the low on Tuesday, we might have that low hold and then rally up Wednesday, potentially even Thursday. But Wednesday is usually distribution day. Thursday is either continuation or reversal. So there is also the possibility that we rally up tomorrow, okay, and then we reverse from there, and then we still stay, fairly sideways, and we don't catch that move we've been looking for. Just consolidate a little bit further, and then maybe see a bigger dump or a rip come Monday. So different things that we'll be watching, a couple different scenarios that could play out. Let's drop into the 4-hour chart, see what the 4-hour chart says. So on the 4-hour chart, we got our premium discount zones. Again, we're just barely into premium. We can see all the support that equilibrium has offered us in between this swing high and this swing low. We did see our market maker reversal back here, in this move here, but also in this move here. We rallied higher. Okay, we also have a support level that's been broken, but we also have this resistance line that we've kind of popped over a couple times, and now we're trading below. Let's throw our 21 SMA here, also bearish. We are below the 21 SMA on the 4-hour chart. And again, on the daily chart, we closed below the previous day's low. We're getting nice displacement candles on the 4-hour chart that look pretty bearish, but we still have not taken this giant bullish displacement. So we've traded down into it, but we haven't closed any candles below that. So that's going to be our first confirmation, is closing below this breakout candle low, which is going to put us at 233. Okay, so if we close candles, 4-hour candles, okay, below that low, because we're really looking for this breakout candle to be taken. So if we close below 233, 233 almost perfectly. 4-hour candle below, so maybe like tomorrow's first 4-hour session. If we close below that, we'll be looking for further distribution to the downside to take that 226 level. But right now we haven't taken it, so we're still a little bit in limbo. But again, here's that wick to low to high, optimal trade entry right at the previous week's high. I think that's going to hold, and I think we're going to see a flush. We also have this kind of, complex head and shoulder pattern where we have a shoulder and a shoulder. We have a head, we have a shoulder, and potentially a shoulder. Or you could say shoulder, shoulder, however you want to look at it. But we have the looks of a complex head and shoulder that could take us down. Definitely could take us down a little bit lower before we see a more significant bounce. We got a fair value gap here that we also could target. That puts us in that same general vicinity, 216, 217, up to 221. So we'll be watching that as well. If we do start selling off and we take that level, we might find support and get a bounce there. Maybe come back and take it out, or maybe we just find support there. Liquidity sits in those fair value gaps just like it sits in these lows, in these highs, in wicks, and in order blocks. So we want to treat it as a liquidity target. So we take one liquidity target because we have no additional sell side wicks on the 4-hour time frame all the way down to here, basically. This one is not super relevant. So this one is the one we're looking at, but that's a big drop between 216 and 205. So liquidity target here, fair value gap liquidity target, sell side liquidity right here. Let's drop into the 1-hour chart. On the 1-hour chart, we have our buy side liquidity here in these blue wicks, okay, and then again our previous week high. We see this 1-hour order block that's really been holding. We even didn't quite get down to it today. Held over here, held over here, held over here, right? It's really held up. It's 1-hour order block. It is a swing order block, so it's not an internal, it's a swing order block. Okay, we have our liquidity target we already talked about. We have this descending trend line. But we are also in a descending wedge or a descending triangle pattern that we broke down and came back up to. Are we going to break down further, come down into this order block, right? But where's that level I was saying we need to take is that breakout candle, which was 233. So that is, let's see, right about here. And so we still haven't even taken this 1-hour breakup candle or breakout candle. So we need to close below that first, 233 and some change. Then we need to come back down on that 4-hour candle all the way to 233. Then we need to clear this order block, right? So there's a lot of things that we need to get through if the bears are going to run this down to 226. Now on the upside, there's much less to overcome. You can also see on the 21 SMA, we've got that moving average to turn down, and now it is trending down as well. So you could also draw a trend line. I don't do too much with the trend lines, but you could also draw a trend line here. So there's always a possibility we can pop back up to that trend line in the low 240s and then come down even further from there. Or we could just break up, start taking buy side liquidity, head even higher. I don't think that's going to happen because of this daily optimal trade entry that I saw. That's usually a very clear indicator that we see a smart money reversal on a daily time frame, especially how perfectly it hit. But it could just be a fake out, so we'll be watching it closely. We also see that 4-hour fair value gap where we also see a 1-hour fair value gap inside of that. So we're going to say that's a high confluence liquidity target. You could mark it off with a separate fair value gap in there if you wanted to indicate both. So we'd be looking for price to deliver most likely in between both of these fair value gaps. And then if you measure that 50% level of this fair value gap, you'll find consequent encroachment. And that's a likely target that we at least trade down into that middle range. But what I've noticed a lot with Tesla is we've been trading right to fair value gap, boundaries. So if we were trading down, we've been lately trading right to the very edge of the boundary open and then rallying off of it. So don't be too married to coming down 50% into this fair value gap. Doesn't mean it's going to happen. I'd be looking, if you were short and you had longer expiration contracts, I'd be looking at that 221 and then potentially exiting for a bounce and then seeing if we can bounce up. Maybe there's an order block above and then we can trade back down through it. So let's look at the 15-minute chart. On the 15-minute chart, we got the 21 SMA to roll over, right? Since the top, let's go back and look at the top. Okay, we've traded below, we came above, we sold down, we got back above, we got below. We've just been kind of hovering, but if you also look, it's still trending down. And now we are below the 21 SMA again. We are inside this fair value gap here. Almost closed it, hit it perfectly with a wick. We'll see if we come back down, close it entirely. But on the 15-minute chart, also below the 21 SMA as well. We are setting swing order blocks up here, and we have a small fair value gap up above at the 243. Not sure we're going to cycle back down until we come back down into this fair value gap. Then we might see price drawn back up here and then head to higher highs. But nothing says we got to fill fair value gaps immediately. We've already kind of come back to this level multiple times. And unless we get a really positive reaction to PPI and Fed Powell, where we could rally up there. And then they don't like what JPOW says, and we dump it from that point. We have seen Tesla rally into FOMC press conference before, so it wouldn't be unlikely to see us push up into this order block or maybe even to this fair value gap and then see that press conference happen and see a nice big dump down. If that happened, it would be smart money's one last attempt to grab price around this optimal trade entry in that 61.8, 62% to 70.5%. Again, if you were to measure it out and we looked at it extended out here, right? If we look at that 618, it's right inside that order block. That fair value gap is right below that golden zone or that optimal trade entry zone. And so it wouldn't be unlikely to see us drive up into that and then dump from there as smart money baits one more time to get before the bigger flush. Again, I think our target is 226 and then down to this fair value gap below. Last thing I want to look at is today's silver bullet time macro. So let's go ahead and throw our silver bullet on, and we'll throw our London session on, and let's just dissect what happened. So with the London session, typically we're looking for manipulation to the upside. We didn't really get that. We just got a wick above, and then we sold down from that point. Then what we are often looking for is for price to return back up to that London high. So none of that happened today. So it was a little bit more of an unusual situation. And again, the driver was the CPI report. But we, broke the London low. We delivered down into liquidity here. And then what we're looking for, right, is that we're looking for potential for fair value gap to be laid, and then possibly an optimal trade entry to get our entry point. So if you wait it around, basically what you're seeing is as we take this low here and break structure, there's a fair value gap that's laid here. Okay, price traded back up into it, through it with a wick. Let's measure that move here. Okay, we almost got back to 61.8. We didn't get to 70.5, but we also traded into that fair value gap. So that's two things we're looking for. So that would be your entry right around here as we traded back up into that fair value gap after we broke this micro change of character here, because we're looking for fair value gap with that break around the same point. And that's where we're looking for our entries. So if that was your entry and you took it, we're targeting previous lows here. previous lows here, and then ultimately potentially previous lows here. So if we go ahead and say we grabbed it right here at the fair value gap, so that wouldn't even be like the perfect entry, but just inside the fair value gap, and we targeted the previous low. You can see we hit it to the wick perfectly right here. Happened outside of the silver bullet, so you would have been waiting around for that position to happen. And if you set your stop loss at the previous high, which is the way we often trade this specific setup in the silver bullet macro, it's a 2.6 RVR. It wasn't good for much. It was good for a $2.50 move on the stock. So depending on which contract you played, that would have been what you were looking for. But you can also see, although we didn't get up to optimal trade entry, we did come back down and hit that full symmetrical swing exactly to the wick. And we set equal lows here, which is going to be important because I don't think we've come back and cycled back through to take these equal lows yet. So although we found a nice bounce and a rebound there, we have equal lows in these wicks that need to be taken. So we'll be looking to see tomorrow, do we end up dumping down, taking these equal lows, heading down to our targets down lower. So that was the silver bullet. That's something that we're focusing a lot on with the Rawstocks, Discord, the Rawstocks video content, because I am a strong advocate that if you become very proficient in trading this time macro, which is taught by the Inner Circle Trader on YouTube, his content is all free. You can find it on YouTube. I recommend taking the 2022 mentorship and then the 2023 mentorship. But if you become very proficient in finding the setup here, even if it doesn't fully play out during the silver bullet, like we had to wait all the way through most of the day to get to the target, there's usually a really, really good setup in here that's going to make you $100 to $200 on a single contract, which, is all you need. And then you can learn to scale from there. But if you practice that silver bullet macro over and over and over again, you'll get very proficient. And it doesn't just apply to Tesla. There's other indexes. There's other stocks that it can apply to as well. So I urge you to just go ahead and try it, give it a test, start to practice, back test it. Go back and look at other silver bullets. We have every day I post the silver bullet, what I identify as the silver bullet macro setup. I post that in the Discord. It's under the education setting in the forum. And you can see those. You can back test it and then try it for yourself. Recommend paper trading it for beginners who are just starting to learn the silver bullet. If it's something you've been practicing for a while and you feel comfortable, go ahead and trade it for real. But oftentimes the call outs that I give are also during the silver bullet macro. So if you're interested in that, join the premium. We got that 7-day free trial going on right now. Look forward to seeing you guys on the next one, and good luck trading with the PPI and the FOMC tomorrow.